Good morning, traders, and happy Friday. It's 8:01 a.m. Chicago time on Friday, the 28th of January, 2022. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2160 as we barrel our way to the 2200th episode. 2200 episode. Imagine there are about 252 trading sessions in a year. So we're approaching 10 years of doing this with me taking a few weeks worth of time off and not doing episodes for then. Pretty amazing, I think. It goes to show just a little bit consistently can go a long way. Anyway, this morning, what's an overnight trade? It's been quite interesting, actually. The overall sentiment when I came in is that Apple was up by about 4%. It's really controlled a lot of the size in the S&P and the Nasdaq. Here's the pre-market heat map. You can see Apple nice and bright and occupying the square footage or the area of the box details the market cap weighting in the S&P 500 of that particular stock. And you can see the big ones are Apple, Microsoft, Google, the FANG stocks, Amazon, and so on. Netflix getting smaller and smaller in here. But the market then dropped, and we had a risk off when I was updating the sheet here. Overnight exposure, risk exposure was solidly risk off, well orange, and it has recovered. The S&P was down almost 120 basis points. 120 basis points with a low of 42.66 and a quarter. We recovered to settlement in the S&P. We went positive just now. Settlement in the S&P is at 43.17, and we're at 43.05 quarter, 43.1775 actually. And so it's a very active session. We again have heavy volume. 431,000 contracts, but the risk-off sentiment moved just after the releases that came through, which really changed things. The personal income, personal spending, but most importantly, the employment cost index, which is listed as a low-tier figure. But because employment is so key right now, and the market is so tight, and inflation, as Jeff Snyder had explained in that webinar we had with him about inflation and the Fed, he said inflation really entrenches itself through wages more heavily than other components. And so employment cost is really, really important because that's a lasting cost. The supply issues, the supply constraints, the demand supply curve, the little graph that crosses, that could move up by a little bit, and then come back. You look at shipping containers out of China, for example. The cost of those going from $2,000 per 40-foot container to $22,000, and now coming off. But with employment, that's a little more sticky. It would require laying people off in order to reduce those prices. It's hard for people to adjust to a lower level of income, right? So that's where it comes from. That came in at 1%, was expected at 1.2%. The previous is 1.3%. So you can see there's a short-term downtrend there, and the market really liked that. I also, if you're in the Convergent chat, I've been chatting a lot this morning, was in here since about 5:15 a.m. Chicago time, and I was commenting about the fact or the indications that the selling was overdone, especially in the S&P. So I was looking for a bounce, and we got a heck of a bounce here of about 50 points. So that was nice to have. In terms of, so that's the overall picture. Apple strong earnings. German GDP growth was worse than expected. German GDP growth came in at the Q on Q flash came in at negative 0.7 versus expected negative 0.3%. And growth rate year on year flash is at 1.4% versus 1.8%. The prior was 2.9%. So you could see the German DAX and the Eurostoxx 50 really staying weak. They were down over 200 basis points this morning when I first came in. So there's just a lot of mixed currents, and that's likely to continue. And then we also have the central bank jitters. Of course, we still have this big overhang, banks raising interest rates, except for China. Very interesting picture all around. So that's what we've got. Crude breaking higher, up 200 basis points. Crude trading at 88.33. However, crude overall is sideways. It's resting. Crude has popped higher on the releases from a half hour ago, but it was really balancing. I'm still expecting crude to tackle the $100 per barrel price. The only thing remaining for today is the 10 o'clock U.S. Michigan sentiment, but this is a final number. The prelim tends to be a mover. The final tends not to be. So the slate is clear in terms of the expected economic releases today. Wow, that's a lot, right? And so that's where we stand. Again, the S&P, 438,000 contracts. Again, very heavy, expecting continued volatility, expecting continued opportunity, and the opportunity goes equally for making a lot of profits, but also losing a lot. The opportunity exists for risk as well as reward. So make sure you stick to your stops and stuff. The S&P has shifted the point of control from 43.45. So we had this point of control hanging at the high, and it just moved it down to 43.10, and we are holding steady at 43.18. Was expecting a test down into the 09. That's done, and now we're consolidating into the open. It looks like we're in a bit of a recovery. 43.42, 43.43 is a key reference above, a key test balance price in this region. So in this region, the biggest price that represents balance is that 43.43, and that's likely to be the magnet. Pre-market today, we had Chevron, Phillips 66, and you can read what's in front of you. Caterpillar, we have nothing after the close. Capiche? I'm not going to go over yesterday's thing. I tried to edit I forgot to turn off the broadcaster yesterday on YouTube. So yesterday's Trader Bite was like an hour and 10 minutes long. I went to try to edit it and to trim, and I'm not experienced in it. And I think I trimmed the wrong end of the video or something. Instead of keeping the first 22 minutes, I ended up keeping the latter 48 minutes or something like that. And so now yesterday's video just shows the subscribe thing, the page that I had up. Again, I need to remember to turn the broadcast off. I just want to get right into looking at the market on the open. What did we do yesterday? Here's the overall picture of what happened yesterday in our review segment. By the way, cryptos are popping a little bit as expected, expecting them to push into that 42 area that I talked about before turning back down. So crypto is up 4% on ETH and 4.09% on Bitcoin. Here's what happened yesterday. A nice little open auction. Nice little open auction that tests higher, breaks down, and then consolidates, and then finally breaks lower, holding the mid into the closing week. We had a double distribution. Let's bring back some of the detail. Let's kill this frac indicator. we had basically a double distribution profile closing in the lower distribution of the prior session. So let me change my pen to maybe I'll just make it yellow. What the heck? So you could see yesterday way to the left. Let's make it thicker. You can see there's a distribution down here, a distribution up here yesterday, the day before. And look at what it did yesterday. Yesterday, it stayed up in the upper distribution. Remember that line in the sand was around 85 or so. And then it formed a lower distribution, finishing at the lower distribution. Yesterday, the way it closed, it clearly showed that it's weak. It closed weak. You could see there's a ton of selling into the close there. The delta just absolutely nosediving in the last minute of trading. So we expected that this auction is likely not done and that it would likely continue lower. And it did. Remember, it pushed down into 42.66. What's the number? Yeah, 42.66 and a quarter in the overnight session. And now we're back at 43.16. So we're back down here. We're against settlement. This is where we're opening today. Right here. This is the live price right there in that little white tab. So we are right against it, and this is settlement. This is settlement. And so we are right at unchanged in the S&P. The S&P is currently down just a point. And so we are picking up where we left off. So what's important? We need to watch what it does with this 43.45, which was yesterday's overnight point of control. So tonight's overnight point of control, which is now 43.10, was 43.45. Yesterday's point of control was 43.45. So we are duplicating the auction here, and we are likely to play the same levels as before, with this 43.70 now becoming the line in the sand. Used to be 85. 43.70 is a key price the market's likely to test or wants to test. And if it does and takes it, then it's likely to reverse and go bullish. We still put in a higher low yesterday than the prior session. We did so in the overnight session. We did so in the day session. So buyers are supporting prices to the point that they're not allowing the one-time framing to be breached. So that's a really important indication. So yesterday was basically an inside day. We'll see if it turns over and turns back. I would have loved for this thing to open in a gap lower, because it would have been a very high probability buy into the open, looking for responsive back towards 43.20 and then 43.45. That would have been the perfect trade. That trade did not was taken away in the overnight session. Here's the overnight session. Let's turn these levels off. Here's the overnight session. We broke lower as expected. We took out that 98.75 area low from yesterday. We broke lower into 42.70. We got to 66 and a quarter, and now we're back to unchanged. And we're battling this mid and the full session VWAP, and the overnight sandwich between the prior settle and the overnight point of control. So we are opening in this very jammed up area, and the next price up to test is this again 43.45, 43.43. That's the big balance zone in this area. This is the area that we're likely to check out this morning. If we push higher, that becomes a key target. And so that's where we stand. Above there, it's 43.70. So 40, 45, and 70 are key areas for today above. Okay, so that's where we stand. Delta is almost at unchanged. The price is pretty much unchanged in the S&Ps, and there's not much more to say. What have we done for the week? Let's switch this chart to prepare for our... What have we done for the week? Look at what we've done here. Even though yesterday looked like a seller's, the sellers were in control, it actually still maintains the one-time framing higher lows. We don't care about the highs in terms of trend in market auction theory. It's how they defend the low that defines the trend. And you can see the lows are just higher and higher and higher. Yes, we had a lower high yesterday, so it was an inside day, as I said. And the closing prices have been stuck between about 44.10 to the upside, but recently the closing prices have been stuck between 43.50 and 43.20. So closing prices have been in a very tight range. We end up creating this 43.75 MC point of control of the week. Really important area up above the 70, so 40, 45, 70, 75. And we're in the magnet right here. We're in the magnet, not 75. I mean 43.20. So we're in the magnet area. So the S&P has fallen, come back to settlement. Yesterday's settlement closed at 17 and a quarter, 17.75. The 20 is the balance price for the entire week, Monday, Tuesday, Wednesday, Thursday. Combined, you can see the point of control is at 20, and here we are. We're opening in balance. So what do we expect coming into today? Again, a pretty whippy open auction in range. We are likely to test yesterday's low. We're likely to jam that low. But overall, I'm expecting this thing to flash back up. It is not doing a good job hanging on to those lower prices until it gets above 4,400, and then it's not doing a very good job hanging on to those upper prices between 4,400 and 4,415. That's the 30,000 foot view of what price is doing. It's also not able to hold prices below 4,300. As you can see, the tails here, or the bottoms here at 4,300, and that's how things are shaping up. So there's a lot of interaction, a lot of volume going off in this 4,400, 4,300 range as participants are taking positions, hedging, whatever they're doing. We don't know. That's what we're coming into. Given that today is that Friday, I want to engage with you for a second and have other participants here, especially on YouTube, just punch in where you're from, where are you located currently. It's really cool to see just the diversity of traders. A lot of traders, of course, in the U.S. and the U.K. and Canada and so on. But there are folks coming in from Lebanon and Saudi Arabia and Israel and India and Hong Kong and Singapore and Bangkok, and it's just incredible. Australia, just incredible. If you want, you can punch in your Twitter handle if you want to connect. And of course, you can always block people there. Please do not share your email address or phone number because they will get harvested from the feed, the public feed, and you will get absolutely spammed. So look around you, see who you can connect with. There's no way to contact someone directly through the chat. So just type in your Twitter handle or Instagram or whatever if you want to connect with other traders, which is really the biggest motivation for me, is to connect traders. I don't think traders trade well in their when they're by themselves. Okay, so let's take a look at what's expected for today. What a great week here. I know I say that, and I cringe a little bit as I say that because it may not be great for many traders. Many traders may have lost a lot this week or experienced a lot of frustration. But in great, I mean in movement. What we do with the movement is something else, is really up to us. Let's take a look at what we've got very wide ranges. But here's a view. This is a 30-minute bar chart. This is a view of what we've done. You could see very clearly what the overlap is. It's just, you know, these day session, these blue profiles are really overlapping each other. We are really balancing out in this range. Again, the 4,400 to 4,300. And we have come back into yesterday's point of control in settlement. This morning, I'm looking for an open auction that drops a little bit. I'm looking for it to get supported around the 42.95, 92 area. And then I'm looking for this thing to really squeeze higher and get us into the 70. So we're looking for the 70 up here, 70, 75. Expecting a reaction at the 70, 75, consolidate, and then to move into the upper distribution to bring us into line with the 87.90 above. So that's where we're looking for this thing to balance out. Brings us into line with what happened 2 days ago, what happened yesterday, to accept this balance up here. That's what's expected. I'm expecting that the market, that participants are likely to come in and buy the dip-ish. Remember, there's a lot of overhang, so it's not buy the dip to new all-time highs, but I'm looking for it to be buy the dip-ish this morning. Secondary open auction that attempts to push higher, fails to do so. So we're looking for an impulse or a real fast move down back into the 43.10. So maybe the 45 here shuts the door. The 45 shuts the door right here. 45, possibly. I'm going to watch for a reaction there. Back into 43.10. And then we take out that low from yesterday, which is at 98.99, and then we threaten the low from 2 days ago, which was at 92, and this could be a precipitous fall all the way down to 42.08. 42.08. It's hard to type with a mouse, to write with a mouse. That's what we're looking for. So where do we get jammed here? We get jammed at 98. We get tested at 98. We get tested at 92. And then it's really a free fall from here. We have an excess low that takes us down into this 12 area, and we're likely to just very quickly move down. I'm looking for 42.08, and that gives us a pretty good, pretty decent range, about 130, 140 points for range. The range for the week has been outstanding. It is a little bit stretched, and that's what's driving the statistical expectation that we are likely to push up higher today. But we are in balance. Just remember, we are in balance. We've been in balance for a couple of days now. And so, the open is expected to be noisy. Watch your risk. Thank you for listening in. Hopefully you've gained something. At least you've gained some knowledge this week, some experience. And just give yourself time, be patient, and respect your risk. Without risk, you're just a compulsive gambler. Good luck.